Bitcoin is the largest digital asset in crypto, comprising nearly 60% of the crypto market cap. But it's stuck, because Bitcoin has a multi-trillion-dollar trust problem. Previous collateral models introduced unacceptable risk. Centralized lenders collapsed as credit was opaque. Large holders need transparency. That's why Hashi exists. For the first time, native Bitcoin can be orchestrated directly from Sui smart contracts. This unlocks decentralized financial services for BTC holders without being forced to rely on centralized counterparties and their balance sheet risk. Collateral logic is enforced by smart contracts. Trust reduced to two assumptions: the Sui validator set and the loan contract. BTC is locked on the Bitcoin network through an MPC-based signing system on Sui. The Sui validator network becomes a Bitcoin MPC signature. No single party controls the private key. Funds move only when a quorum of validators produce a valid threshold signature. So, the same validators that secure billions in assets on Sui govern security on the underlying BTC, all according to loan rules encoded in the smart contract. To mitigate validator collusion or systemic compromise, Hashi adds a guardian layer, which acts as a backstop and secondary check before BTC can be withdrawn above a preset threshold. Bitcoin is released from the MPC wallet only when a valid MPC signature is produced, and the guardian confirms the thresholds are not breached and signed. This architecture enables Sui developers to use a receipt backed by locked Bitcoin in an MPC wallet as collateral governed by smart contracts on Sui. Loan parameters, including loan-to-value ratios and liquidation thresholds, are defined in the code of the lender's Sui smart contracts and verified to meet public collateral management standards, ensuring that the collateral is not manipulated or double-spent. This means that Sui DeFi protocols can transparently define the terms of the loans with code, and that all collateral can be cryptographically verified at all times. Multiple third-party price oracles will update Bitcoin dollar and stablecoin prices in real time and feed these prices into Sui smart contracts governing the loans. Collateral calls and liquidation can execute automatically under venue-defined terms following transparent public standards designed to ensure collateral safety. And coming soon, an insurance layer for Bitcoin. Bitcoin holders will soon benefit from an additional available level of protection to support insuring the underlying Bitcoin. Premiums are paid in Bitcoin, claims are paid out in Bitcoin. By using BTC as loan collateral for stablecoins, Hashi is designed to avoid triggering taxable events tied to dispositions, subject to jurisdiction. Those stablecoins can be used for yield strategies, business expenses, trading, or operational expenses without selling the underlying Bitcoin. For stablecoin holders, Bitcoin-backed collateral drives demand for liquidity, delivering sustainable yield grounded in real collateral, not speculation. Lending venues that seek to lend against BTC on Sui can choose to lend a variety of stablecoins, including Sui Dollar, that offers holders rewards. This allows borrowers and protocol designers to offset financing costs, boost yields, or construct vaults that combine dollar liquidity with various strategies on Sui. Hashi depends on predictable, enforceable smart contract logic. Sui's move language enforces strict asset ownership and allows for formally verified contracts. Bitcoin collateral is treated as a programmable object with defined behavior. Contract execution is automatic and transparent. This enables developers to utilize native Bitcoin on Sui without centralized entities. Hashi is built as open infrastructure, supported by an institutional ecosystem, committed to making Bitcoin productive on Sui. From day one, Hashi launches with integrations across custodians, lending venues, DeFi protocols, and wallet providers. Custodians support institutional-grade workflows. Hardware and software wallet integrations enable access across environments. Lending venues can originate and manage BTC-backed lending products for stablecoins or for any asset on Sui. Yield strategies, including vaults and RWAs, will support receiving stablecoins and returning yield back to the user.
DeFi protocols can incorporate collateralized Bitcoin on Sui liquidity into vaults and markets.
Hashi meets users where they are, integrating into existing custody and wallet infrastructure, rather than requiring new operational models. Hashi is not a new product. Hashi is a native developer primitive on the Sui network. On Hashi, Bitcoin stays native, and trust assumptions are minimized. More than $1 trillion unlocked on Sui. Hashi is live on Sui DevNet,